look into this question. B Supply Private Limited is a registered manufacturer of auto parts in Kolkata, West Bengal. The company has a manufacturing facility registered under Factories Act 1948 in Kolkata. It procures its inputs indigenously from both registered and unregistered suppliers located within as well as outside West Bengal, as also imports some raw material from China. The company reports the following detail for a tax period. So raw material 3.5 lakhs, consumables, transportation charges, like this some details are given and sales data is given. Now in this, all the above amounts are exclusive of all kind of taxes wherever applicable. However, the applicable taxes have also been paid by the company. Following further additional details are furnished by the company in respect of the payments and receipts report by it. Raw material amounting to 0.8 lakhs is procured from Bihar. So total raw material 3.5. In that raw material 3.5, we are getting a breakup. 0.8 is procured from Bihar. Out of 3.5, 0.8 is procured from Bihar. And 1.5 lakh is imported from China. So minus 1.5. So therefore 1.2. Okay. In that 1.5, 0.15 is basic customs duty, 0.015 is social welfare surcharge and integrated tax, 0.2997 lakh has been paid. That is, whenever you take the value of imported goods, that includes the value of customs duty, everything, okay, excluding GST. So therefore, this 0.15 and 0.015 is part and parcel of 1.5. Don't take it out. So only 1.5 take out. So again, don't 1.5 minus 0.15 and minus 0.015. Don't deduct, just 0.15. So 3.5 minus 0.8 minus 1.5. So 1.2. Remaining raw material is procured from suppliers located in West Bengal. Out of such raw material worth 0.3 is procured from unregistered person. So minus 0.3 means 0.9 is purchased from registered supplier. Further, raw material worth 0.05 lakh purchased from registered supplier located in West Bengal has been destroyed due to seepage problem in the factory and thus could not be used in manufacturing process. So we need to understand here the breakup. So total raw material 3.5. So this is divided into 3. So first is procured from Bihar. Where is this person located? Kolkata, West Bengal. So therefore interstate purchases. Interstate purchases. What is that interstate purchases? 0.8 lakhs. 0.8 lakhs. This 3.5 lakhs. 0.8 lakhs is interstate purchases. And then import is 1.5 lakhs. Import is 1.5 lakhs. So balance whatever is, so 3.5 minus 0.8 minus 1.5, that is 1.2 lakhs. In this 1.2 lakhs again we have a breakup. What is that? 0.3, that is all this 1.2 is intrastate only, and in that, so from registered person, from unregistered person. From unregistered person how much? From unregistered person 0.3 lakhs. Then from registered person how much? From registered person it will be 0.9 lakhs. In that 0.9 lakhs again, so 0.05 lakhs destroyed by fire. Destroyed by fire is 0.05 lakhs. 0.5. So 0.9 minus 0.05 is what? 0.85. So remaining is 0.85. So this is the data that we have. Now, in this background, what we need to understand is that so interstate purchase, import, balance from registered person, from unregistered person, all these things. On this point 8 lakhs, whatever GST paid, that can be taken as credit. So IGST paid can be taken as credit. So on the raw material, first one purchased from Bihar. Okay. So what is the rate of GST? So 9%, 9%, 18% respectively. So therefore, first one is 0.8 lakhs. So 0.8 lakhs into 18%, that is 14,400. That is the first one. Second, import. On import, IGST paid. What is IGST paid? 0.2997 lakhs. That is 29,970. That is also import IGST. Then next one, raw material purchased from unregistered person, no GST paid. Raw material purchased from registered person within the state, only 0.85. So 85,000 into 9%, 7,650, 7,650. You understood? So that like that. So raw material point is over. Then the next one, number 2. Consumables. What is the value of the consumables? Consumables is 1.25. Consumables are procured from registered supplier located in Kolkata within the state and include diesel worth rupees 0.25 for running the generator. On diesel there is no GST. So therefore total how much? 1.25, 1.25 minus 0.251. On that one, 9% and 9%, that is 9,000 and 9,000 will be taken towards consumables. Then next, transportation charges. What is the transportation charges for bringing the raw material to factory? 0.7. That transportation charges comprise of 0.6 paid to GTA Kolkata and 0.1 paid to horse-pulled carts. Horse-pulled carts, there is no GST. So transportation of goods by other than GTA or courier agency is exempted. Transportation of goods by roadways other than GTA or courier agency is exempted. So which means that on that 0.10 there is no GST, only on 0.6. That to GST rate is 5%, means it will come under RPM. But we can take the credit. So 0.6 into, that is 60,000 into 5%. Okay. So therefore that will be coming 3,000, that is 2.5, 2.5, 1,500, 1,500. We can take as IDT, and remember it will also come under RCM liability. Then next one, life insurance. The next one is salary paid to employee on roll. No GST on this. First of all, no GST paid. Premium paid on life insurance policy taken for specified employees. So life insurance, see this, life insurance policy for specified employees have been taken by the company to fulfill a statutory obligation. So statutory obligation in this regard. So yes, we can take ITC with respect to this. General life insurance and health insurance is block credit. But if it is under a statutory obligation, we can take the credit. Okay. So what is that life insurance here? The life insurance is 1.6. So 1.6, 1,60,000 into again 9%, 14,400, 14,400 CGST, SGST paid. Then next, what is the next number? So audit fees. Audit fees, they have given audit fees paid to Messrs. Goel and Co, a firm of chartered accountants registered in West Bengal for statutory audit. Yes, we can take credit. Audit fees 50,000, again 9%. 4,500 and 4,500. Okay. Then the next number is telephone expenses. Telephone expenses 30,000. Related to telephone expenses, telephone expense pertain to bills for landline phone installed at the factory and mobile phones given to employees for official purpose. The telecom service provider is in West Bengal, so intrastate. And what will be taken? CGST, SGST. So what is the telephone expenses? 30,000. So 30,000 into 9%. So 2,700 and 2,700, 5,400. And then bank charges towards company's current account maintained with a private sector bank registered in West Bengal. Bank charges are towards company's current account maintained with a private sector bank registered with the West Bengal. Current account charges other than interest on loans, advance deposit, all other charges of a bank will be taxable. So 10,000 into 9%, 900 and 900 will be taken. So this is the inward supply. So total input tax credit over. Now outward supply, if you see, outward supply and opening balance also we have. Opening balance also we have. Then outward supply, if you see, sales in West Bengal, CGST, SGST. So 7 lakhs into 9%, 63,000, 63,000, 63,000, 63,000 total. And then we have sale in other states other than West Bengal, 3 lakhs. So on 3 lakhs, it will be 18%, 54,000. Okay. So then export under LUT, no GST. Export under bond or LUT, there is no GST here. So with payment of GST or without payment of GST, so once it is exported under bond or LUT, it is without payment of GST. So that is nil. And the total output liability will be 1,26,000 plus 54,000, 1,80,000. ITC already we have 55,650, 48,650, 53,370. That will be adjusted. So then the net liability we have. And RCM liability we need to add, don't forget. So we have an RCM liability now that we need to add. What is that RCM liability? So here transportation charges is RCM liability 1,500, 1,500 we need to add. After FCM liability minus input tax credit, then we need to add RCM liability, that is the net GST payable. Okay. So this is with respect to the computation of this question. Actually, this is a simple question, but involves lot of other points. Block the credits and net GST payable. Connecting this question is given. Okay.